Now we'll move to the bills section. So bills are just a way of telling QuickBooks that we're ready to pay something. So it usually means we pull from a vendor, and it doesn't mean we're paying it right now, but that we've received a bill. I guess is the best way to put that. Sometimes it also means that we've received services and that we're going to pay it at some future point. And again, read the text. To add a bill, we just go up to new, under vendors, bill is an option, and it brings up our add bill window. So this is step 2 in the bills section. 3, it tells us to do Tim Phillip Masonry. There's Tim Phillip Masonry. And then we're going to select, because the vendor that we created doesn't have, or that we chose doesn't have terms in the system, we'll tell it the terms. And that will automatically adjust our due date because we're saying it's due within 30 days. And then sometimes we're setting our bills up by categories and other times by items. So it tells us to collapse the category details and expand the item detail. That's steps 5 and 6. And then if we look over here, we'll see we already have a purchase order open for Tim Phillip Masonry. So what we're going to do is just say we're going to add all of the purchase orders we have open. In this case, we only have one. But by doing that, it puts all the info that was on that purchase order here in the bill, so we don't have to like type it all out again. And so step 8, it now shows all that stuff that we had on the purchase order, which is what I just said. And that's it. So it's pretty nice if you have a purchase order available and you're in essence just converting it to a bill. And we're going to hit save and new. And then we'll move on to step 10, create another bill for Tanya's Nursery. Again, this is our vendor billing us. So we're recording that we owe this money to them. Again, we're going to select net 30 from the terms, use the date, use our bill date, and it will do an automatic due date for us. And then when we go to line 1 in the products and services area here, again, we're going to add something new. So again, we can add new products and services from this point too. And we're going to add a new inventory product called Lavender. You spell lavender, E-N-D-E-R. I don't spell it that often, right? The initial quantity on hand is 0, so we don't actually have any lavender yet. That's why we're buying some from Tanya's Nursery. We'll use today's date as the as of date. We're going to put it as a landscaping item. And make sure it's listed as an inventory asset. Our sales price rate is $15 and our cost is 10. And the income account is sales of product income, and the expense account is cost of goods sold. It says is taxable, yes, which just means the sales tax box should say taxable standard rate, which it does. So we're good there. And then we're going to hit save and close. You'll see that we've added lavender here in our product or service. We're going to tell it 100 for the quantity. And I think that's it. So there we've created a bill from Tanya's Nursery for 100 lavender at a cost of 10 each. And we're going to hit save and new. That's step 15 if you're going down the steps. And for step 16, we're going to hit another bill from Computers by Jenny. And again, we're going to select net 30 for the terms. So step 17. In step 18, we're going to expand the category details section and collapse the item details section. And we're going to select equipment rental. Maybe there it is. You'll notice under just the difference between the two in category details, we just do amounts, right? We're not adding items to our inventory. So under item details is where we're adding items to our inventory. That's why we have to have quantities and stuff like that. So it depends on what we're buying, right? This supplier, we're doing equipment rental. And then we're going to type 1200 on the amount line. If we wanted to bill it to a customer, we could choose billable, but we're not. And so that's it. We're just doing 1200, probably, I don't know what we rented from them, but we rented $1,200 worth. And then we're going to click save and new. So many bills. Isn't this like real life? Like when we do revenue, like money we've earned, it's like one. When we do bills, it's like 4 or 5 of them. Welcome to life, huh? So we're going to do another bill for Brosnahan Insurance Agency. You'll see terms actually popped up in here as net 10 because this company, we already had terms in the system for them. You'll see the due date will be 10 days from today. You'll see right now we have insurance in the category, but we're actually going to change that to do prepaid expense. So what we're doing here is we are paying in advance for our insurance. The amount is $1,800. And so we don't want to just record this as an expense. Whoops. We want to record this as an asset called prepaid expenses. Because even though we're paying $1,800, it's not all cost right now. We're going to recognize that we're going to have insurance covering full year. So we're just recording it as a prepaid expense asset. And there's actually a little bit in here about that worth reading through. When we do a bill, we can either record it to an expense or an asset. And you'll see prepaid expenses is an other current asset. It just means expenses we're paying in advance for. That's what expenses we're paying for right now. Step 28, we're going to hit save and close. For the bills section, chapter 5. So we're going to move on to the next section.